Afrox released results, and some say that they were slightly disappointing. But take us through some of the numbers and the issues that you experienced during the period.
Good evening. Sure, it's nice to be here. If you look at the results, if you look at our sales number, it's very indicative of what happened in the economy, I think, in 2010, which was very flat. It was very flat compared to 2009, and 2009 was down on 2008. I think that's quite indicative of what happens in the economy.
Your revenue decreased 2% to 4.7 billion rand.
Yes. So the economy was pretty flat. Our volumes was a similar number, maybe even a bit lower than that. If you look at our headline earnings, it's down 26%. There's an additional story to that, and that is the plant reliability problems that we've had in the beginning of last year. We've had some equipment failure at one of our big ASUs, which caused outages for quite a long period of time, which resulted in huge costs. Also resulted in our decision not to increase prices for a better part of the year. We only got into price increases towards the end of the year, and that's probably the main contributor to the headline earnings. Of course, if you look at basic earnings, you'll see there's an impairment number in that as well, where we've impaired our MIG wire plant that's out in Brits, and we're importing that wire. That was a strategic decision to move our manufacturing away from local manufacturing to import.
Let's touch on input costs. One of the big issues as well into 2010, increasing electricity costs, and you're saying an increase there of 44%, wages, commodities. So this being an issue, and you're saying you didn't increase prices over the same period as well, so you weren't passing on those increasing costs.
That is correct, yes. Normally, as an organisation, Afrox has got the capability to move prices on. And we will demonstrate that this year, that we do have the capability to move our cost increases onto our customers. Strategically, last year we've decided not to do that because of those plant breakdowns and the resultant poor service levels. And obviously, with our customers being short delivered for a long period of time, we couldn't push prices.
When you're talking about price increases, to what extent are we going to see? How much of that can you pass on to the consumer?
Yeah, no, most of our contracts has got clauses in where we can pass certain electricity costs. We can pass it on to our customers. So historically, we were able to pass on most of our cost increases. Those that we can't pass on prices, we normally are able to take them out in productivity.
Yeah. Ashraf, let's bring this to you. Looking at companies such as Afrox, it has been said that it's a good barometer to see the demand scenarios, particularly coming through from the LPG side and the ASU side. Tell us about what you think about Afrox.
Well, as Tjaart said, they're able to pass those costs on, and that's one of the attractions. But when you're suddenly faced with significant increases and a slowing economy, it's also very hard to pass those costs on. And I think it would be correct to assume that if this economy doesn't take off this year, you're going to get some pushback from your clients in terms of price increases. So it will moderate to some extent. The other question is, what is your hedging policy on LPG? Because we've got strong oil prices, a weakening rand. How do you deal with that?
And that being the liquefied petroleum gas, just for the viewers out there.
Yes, that's correct.
Confused, yeah.
Yeah, on the first comment, you're right, our customers are pushing back on pricing, and most of our customers, or a lot of our customers, are big companies, and their procurement departments are pretty sophisticated. So that is true. It's not just passing prices on, but we are generally able to pass it on, and with a declining market, it is a bit more difficult, so that statement is true. If you look at LPG is a regulated market, so there's no hedging. The government gazette states the price every month that we buy from refineries, and that's the price we pay the refineries on a monthly basis. So there's no need for hedging. The capability that we need to have, and we do have that in LPG, if you look at the oil price, the way it's increasing, is obviously to match our price increases further down the chain with that monthly change in the oil price, or in the petrol price and the LPG price. And we change those prices on a monthly basis, and that works pretty well.
Is it a hindrance, the fact that we've seen a legislated maximum pricing for LPG, or is it to your benefit?
No, it's not to our benefit. It is a regulation, and we believe the more regulation, the least efficient the market is. But it's a small part of the business. It's been regulated for consumer or household consumption, and that's of the LPG business less than 15%.
Mohammed, your view on Afrox?
I think, certainly interesting, and I like your point that you bring up earlier, is that it's very much a barometer for what's occurring in the economy from a grassroots and from at the coalface. So again, seeing those cost pressures come through, taking into account your fact that there were a couple of issues in terms of operations that were down, And then also leveraging on the back that you look to pass through a lot of those increases through in terms of pricing this year. What do you anticipate in terms of that doing for your volumes coming through the business? And then also just in terms of growth going forward. I mean, if you really look at South Africa, that really being your base, you do have some operations in Africa. What is your strategy around that, and perhaps delivering top line growth coming through, obviously on the back of the fact that you're faced with margin compression to some extent?
Yeah, no, that's true. The pressure we have in our cost increases, obviously these plant breakdowns, we don't anticipate passing those costs through. That's obviously you can't do that. But if you look at the normal electricity price increases, wage inflation, transport inflation, we will pass those increases on. We will pass most of those on to our customers. And obviously you must balance that equation. You can't pass it on to the extent that you lose volumes, that you lose market share. So that equation must be balanced.
Yeah, please continue.
But if you look at our growth opportunities for this year, so just to complete that picture with the plant breakdowns, we do believe over the last 2 years, and we've had 2 very tough years in Afrox, over the last 2 years we have got the organisation to a level now where it is right-sized, downsized, all those words we call it, but we do have an organisation now that's efficient. The plants are all working pretty well. The reliability is very good. We've got a very focused and motivated management team in place. And we do believe from that base, we've got opportunities for growth now. We do think a bit of growth will come back into the South African market. Not massive growth, but a bit of growth will come back in the South African market. And we can see the beginning of this year, it's certainly better than the beginning of last year. And we do have in Africa, we operate in 17 countries outside of South Africa, and we have been there for the last 40, 50 years. So it's about 30% of our EBITDA, but that's a high number because the local EBITDA is pretty low. But it's a significant part of our business, and through commodities, those markets are going to grow. And we can see it. Countries like Zambia, oil in Angola, West Africa, mostly oil-based, and then the other African countries, mostly resources-based. And we do see some nice opportunities in those countries.
Do you see that mix, obviously within your EBITDA number, increasing, with a slightly higher emphasis towards Africa and your higher growth economies?
I do think if you look at the EBITDA number over the next year or 2, it's probably going to play around a bit as the South African numbers are recovering. But strategically, we do see that the African base is very stable, the barometer of the economy, growing with the economy, managing margins through pricing and doing that pretty well. And we'll see a higher growth number coming out of the rest of the African countries, certainly the countries where there's resources.
Tell us more about the African operations and whether you're also experiencing those cost pressures and whether you have the same strategy in place this year, in other words, passing on the cost pressures to the consumer in 2011.
Yeah, the challenges in the other African countries are a little bit different to South Africa. The competitive set is different in all those countries. And your challenges there is normally logistics. And if you've got a plant failure, you're stuck because you can't truck it in from somewhere else because that somewhere else is too far. So the challenges are very different, but we do have in all those countries where we operate, we've got significant market shares. Those are good businesses, they've got good margins, and we're well established. As I've said, we've been there for a long time. So countries like Mozambique and Angola, we haven't been there that long, but huge opportunities in Angola, and we're investing in Angola. We've got a business there we started up about 4 years ago. It turned to a profit last year. And we're very bullish on those economies.
You've mentioned 3 countries, Zambia, Angola and Mozambique. Are those the countries that you're going to be focusing on predominantly going forward?
Those are the bigger countries. Obviously Namibia, Botswana, we've been in for many years. They're very stable, they're doing very well. Zambia is probably the next biggest country. Angola, lots of opportunities. Malawi, all those countries. DRC, the southern bit of DRC, just north of Zambia, it's part of the copper belt, so we're very active in those areas. But those are the big areas, yes.
Ashraf, would you be thinking of having this stock on your portfolio? I was chatting to Paul Theron a little earlier. He was talking about the dividend play, cash dividend of 8 cents per share. In 2009, we saw it at 19 cents. Would a dividend lure you to this company or other factors?
The other factor is the turnaround story. I mean, it's an economy play. You're going to get exposure into Africa, and more importantly, you had a breakdown in processing last year at one of the plants. Now that's coming online, so that's going to be out of the equation this year, and it will boost the bottom line.
So consideration to accumulate this share?
It's certainly one to look at. Just the pity about the liquidity.
Yeah, are you looking at it, Hamid?
Again, not traditionally a stock I would have looked at on the same kind of basis that we've had the discussion on. Potentially could be underpriced, and again, if all goes according to plan, as Tjaart has indicated, potentially some value to be unlocked there.
Let's touch on your healthcare volumes. That was down by 5% compared to 2009. You say that it's not unexpected, given that you did lose 4 provincial tenders for government hospitals. That was not renewed. Tell us about the competitive environment here in South Africa.
What happened in healthcare was we used to have the whole state tender, which was all 9 provinces, and government on the previous tender that was awarded the year before last, they moved 4 of the provinces to a competitor. That was expected. We knew that, and it's also maybe not a bad procurement policy of government to have 2 suppliers into a market. The 5 provinces we have left, after the award of the tender, the volumes actually grew within those 5 provinces. So our healthcare business, margins under pressure. As you know, healthcare's margins under pressure across all industries. We understand that. We know it's about affordable healthcare, but it's still a very good business, and it's a business we anticipate growing over the next couple of years.
What are you telling investors in terms of your next move for Afrox?
No, we're busy with the turnaround strategy, and we probably halfway through implementing that turnaround strategy, if not on the right side of halfway. So we're looking this year at a modest recovery in the South African market. We are well positioned to take full advantage of that, and then on top of that, the African market. So we're looking forward to. We're certainly very optimistic about the future.